Tomorrow's US market open could decide whether silver rebounds toward $85 or breaks below $70 and accelerates lower. And right now, most traders are underestimating this level. I just opened the charts early this Sunday morning, and silver is sitting right around the 72 to 74 support zone, a level that previously acted as resistance during the rally phase. That makes this area extremely important going into Monday. Good morning, everyone. I literally just woke up, grabbed my coffee, checked futures pricing, and this setup is serious. After that brutal 10% plus drop recently, silver flushed out a lot of weak hands. We saw forced liquidations, margin pressure, and aggressive selling push price from above $80 down toward the low 70s in a very short time. But now the panic phase appears to be cooling. And when panic cools, positioning begins. If silver holds above $72 and buyers step in with conviction, we could see a bounce towards $78 first. And if momentum builds, a test of the $82 to $85 resistance zone becomes possible. Why? Because above 78, short sellers begin to feel pressure, and short covering in silver can be explosive. But here's the risk. If 72 fails with strong volume, especially during US trading hours, the next real liquidity pocket sits closer to $68 to $65. And silver does not drift lower slowly. It expands. When support breaks, stop losses trigger. When stops trigger, volatility spikes. When volatility spikes, retail traders panic. That's the chain reaction we have to avoid getting trapped in. Now let's talk about what could actually trigger either scenario. Number 1, the US dollar. If the dollar index opens strong Monday and pushes higher in the first hour of trading, expect pressure on metals. Strong dollar equals weaker silver in most cases. But if the dollar pulls back or hesitates near resistance, that's when silver can breathe and potentially rally. Number 2, US bond yields. If yields continue climbing, it increases the opportunity cost of holding non-yielding assets like silver. But if yields cool off, especially if traders start pricing in softer inflation data ahead, that could give metals upside momentum. This is a macro-driven market right now. It's not emotional hype. It's interest rate expectations, inflation outlook, and Federal Reserve policy. Now here's something very important that many people are missing. Speculative positioning has already been reduced after the crash. The market is no longer extremely crowded on the long side. That means the next move, whether up or down, could be cleaner and stronger. When markets reset positioning, they prepare for expansion. That's why Monday is critical. Let me give you 3 realistic scenarios for the week ahead. Scenario 1, controlled rebound. Silver holds above 72. Buyers step in gradually. We see strength build towards $78. If $78 breaks with momentum, $82 to $85 becomes the next magnet. Scenario 2, fake rally. Silver pushes towards 76 to 78 early in the week, but sellers defend aggressively. We roll back towards support and chop sideways between 72 and 78. Scenario 3, breakdown continuation. $72 breaks during high US volume. Stops trigger. We quickly test 68. If panic accelerates, $65 becomes possible before stabilization. Now zooming out, the long-term story for silver hasn't disappeared. Industrial demand remains strong. Solar energy demand in the US and globally is expanding. Electronics manufacturing continues consuming physical supply, and supply growth hasn't dramatically increased. But short-term, this is a battlefield between macro forces and technical levels, and emotional trading in this environment is dangerous. Let me say this clearly. Do not chase the first candle on Monday. Do not panic on the first drop. Let the first 60 to 90 minutes of US trading show direction. Smart money waits for confirmation. Silver is not weak. Silver is volatile, and volatility creates opportunity, but only if you stay disciplined. This week could set the tone for the rest of the month. If we reclaim $85 in coming weeks, the bullish structure remains alive. If we break below $65 decisively, the market may enter a deeper consolidation phase before the next major rally attempt. So stay alert. Watch 72. Watch 78. Watch the dollar. Watch yields. Those are your signals. If this early Sunday breakdown helped you prepare for the US Open, hit like and subscribe. because right after Monday's session begins, I'll be back with a fresh update reacting to the live move. Silver is unpredictable, silver is powerful, and this week could be decisive. I'll see you in the next update.